Fixed income desk at JP Morgan Asset Management saying that it's too short term in terms of the thinking, and inflation is actually quite sticky. So what do you do?
I think this has been the big conundrum for the whole year, Sarah. I mean, the cross currents are pretty deep, and in the short term, these rallies and sell-offs are white noise because you really can't discern what the next move is for the markets. But I will say this, we decided about a couple of weeks ago to start adding risk back into our portfolio. And I think you've seen other investors stepping back into many of the NASDAQ names, not the stay-at-home bubble pop names, but the kind of long-term technology that can deliver reliable growth, have strong balance sheets, free cash flow. But to your question, I don't think it's over. I think we continue to see choppiness. The Fed's done a remarkable job, and I've been a big critic, but they've done a remarkable job in using rhetoric to get the markets to do the heavy lifting for them. And I think that's what you're seeing in the bond market. And stocks are now realizing they may have stock investors, they may have over-discounted a recession and how hard the Fed is going to fight inflation.
Let's talk energy, because crude oil right now is below $99 a barrel. Energy stocks are the worst performing right now in the S&P 500. CNBC.com's Pippa Stevens joins us. Pippa, are recession fears the big catalyst? It's been a pretty sharp slide. Fast unwind of that winning trade.
Yeah, really fast unwind, Sarah. And recession fears are front and center with the idea that any type of economic slowdown will curtail demand for oil and petroleum products. But there are a number of other factors weighing as well, including the stronger dollar, as well as an unwind of the oil as an inflation hedge trade. But on the demand side, I think that it's, natural to look at prior downturns and prior recessions to try to gauge where demand might come in if there is the slowdown. But experts say that kind of ignores the supply situation right now, which is so tight. And also, the consumer is a lot stronger today than, say, in 2008, meaning that we might not have that same kind of slowdown if we do get an economic downturn. Now, Matt Maley did note today that the XLE, which tracks the energy sector, fell below its 200-day moving average. It's only done that 3 other times in the past year, and each of those 3 prior times it was able to regain the level in a matter of days. And so this time around, if it can't regain that key technical level, then that could be a sign of concern for the energy stock bulls.
Pippa Stevens. Pippa, thank you. Nancy, would you be a buyer?
No, well, we have a pretty full position. We've been trimming into the strength, but we still own and are overweight energy. I think this is more of a dollar story than a demand story, because we know we have supply constraints. And, we know that the president has been going to other countries to ask for them to increase supply, and that's just not going to happen. OPEC Plus and OPEC in particular is pretty well constrained from a capacity and delivery standpoint. So I think you'll see a return to this trade, but I don't think it goes on for years as many do. I think it's a 6 to 9 month imbalance that will ultimately get sorted out. And I think as China continues to reopen, we'll see a return to higher energy prices, unfortunately.
Some of the energy utilities doing well today. Constellation Energy, WEC Energy Group at the top of the market. Meantime, let's talk tech, because Goldman Sachs cut its price target on Apple from 157 to 130, maintained a neutral rating because because of increasing recession risk to consumer electronic demand. But analyst Rod Hall also did issue a bear case scenario where he says that Apple could plunge to $82 if recession turns out to be worse than the mild economic slowdown that Goldman is currently predicting. Steve Kovac joins us. Steve, how strong right now is demand for Apple products? Is it a safe haven in recession, or is Rod Hall right typically that it really suffers on consumer electronics demand falling off?
Yeah, Sarah, this is a really big question going into this earnings seasons with Apple is where is demand standing? So we get tons of different signals throughout the first half of the year from Apple and suppliers and so forth. Apple kind of signaling on their last earnings report, demand is so high, we just can't make enough stuff to get out to people. They prioritize their iPhone development as those shutdowns in China kind of hurt other products like the Mac business and iPad business. So we're hearing from Apple and people like Qualcomm, which puts chips inside of these expensive smartphones, that, hey, demand is really good. It's holding up great. Then last week, we have Micron come out saying, well, smartphone demand is about to fall off a cliff, especially if we head into a recession. So Goldman kind of laid out this bear case for Apple here, saying, look, if we do hit a recession, demand will likely fall off for pricey phones. Apple sells the most expensive phones, and this is the bear case they're laying out. Now, we're going to get a test of demand in a different way starting next week, Sarah, when the new MacBook Air, which is supposed to be a really hot product for Apple, starts going on sale. So we'll see if they can keep up with demand for that, especially with these COVID shutdowns still lingering in China.
Yeah, Hall likes telecom and cloud-exposed companies, which he thinks are more resilient. Steve, thank you.
Thanks.
Nancy, you said you have been nibbling in the past few weeks at tech stocks. Is Apple one of them?